Let's zero in on oil. Crude has been down for 3 weeks in a row. It is trying to rally a bit today, but the damage has been pretty intense. For example, just last week, oil slid about 4%. We're joined now by Bob Yawger, energy futures strategist at Mizuho Americas. Bob, it's always great to see you. What is pushing oil down?
There's a couple things here, Andrew. It's weakness in the global economy to a large degree, whether it's China or United States, whether it's the Fed or whether it's Chinese exports, have gone a long ways towards putting pressure on the global economy. Bottom line, Andrew, you use crude oil for two things. You either make heating oil, which is the same as diesel to a large degree, or you make gasoline. Right now, there's not a lot of demand for heating oil or gasoline. So the refiner doesn't need to make more heating oil or gasoline. He doesn't need the crude oil to make the product. So bottom line, that's the problem. Refinery utilization rate right now is low here in the United States. It's 85.4% here versus around 93% last year, same time. And also it's low in China. And that's weighing on prices.
It really has been pretty ugly, but you think that OPEC Plus is highly unlikely to cut again to try to prop up prices?
Yes, I believe that is true. Listen, Andrew, OPEC Plus is Saudi Arabia. They're the only ones you can really trust. They're the only ones at the end of the day, when they cut, it's going to happen the way they say it's going to happen. They're very reliable. Their numbers are good. Everybody else says they're going to do X, but they end up doing Y. And but the Saudis, it is what it is. They don't cheat, and they don't have any more bullets left. I mean, their budget deficit was up big last month. The Saudi Aramco profit was down over 20% in the third quarter. The GDP was down big. They've made a lot of sacrifice for the better of everybody else in OPEC, and unfortunately for them, they're the ones that are paying the price. They would be extraordinary if they would make another cut. They know what the consequences would be. They would have to eat all the losses. And you know what? They've done enough. In my opinion, they've done enough. I'm sure they feel the same way, too.
Sorry, what was that? What was that last thing, Bob?
I'm sure that they felt that I'm sure they feel they have done enough for everybody in OPEC. They're the only ones making the move, and everybody else benefits. They're the ones that suffer. I'm sure they don't want to cut anymore.
Just, yeah, they're tired of carrying the can. Mercifully, the Israel-Hamas conflict has not dragged in Iran in a big way.
Yes, that's another big reason for the downside in crude oil is the evaporation of geopolitics, of the geopolitical risk premium. That has evaporated. Nothing ever became of Hezbollah on the northern border with Lebanon. That could have expanded out to Syria also. Hezbollah is basically a client of Iran and also a big ally of the Syrians. So yes, that never drew in the United States and Iran and brought them really dangerously close to a clash that could have upset the balance in the Middle East. Also, it didn't drag in either Saudi Arabia or the other Gulf states also. The Houthis had fired some missiles, and there was a couple localized clashes, but that did not spiral out of control. Houthis are also a client of the Iranians or an ally of the Iranians. And either through diplomacy or everybody pulling back from the brink of just a total mess, this thing has not expanded, and that has put pressure on the barrel.
Bob, I'm not sure how closely you get into this, but you do note in your report today, your overview of the oil market, that Canadian Syncrude Sweet Blend, which is a pretty highly refined type of oil, hit a discount of almost $7 on Friday. The first time it's gone to a premium, or sorry, a discount since early 2022. Why in particular would the Syncrude Sweet be at a discount?
As I mentioned earlier there, Andrew, the refinery is not running in overdrive here. It's at beaten down levels. We don't need a lot of crude oil going through the refinery. We're not going to bring Syncrude barrels all the way down from Canada right now unless we need to. I would say the magic number on that, Andrew, is the refinery in the United States running at, let's call it 88% to 92%. At those levels, the Syncrude market will get bid again, and it will go back to a premium to WTI instead of a deficit. I mean, if you're Canadian viewers right now, to make sure you said it, but Syncrude is a highly refined, very sought after grade. But at these levels, it has slid below a push to WTI. In other words, it's cheaper than WTI for the first time in years, not in 2 years, basically. And that's a big thing.
What about natural gas? No real joy there. Natural gas got to a low of just under $3 on November 10th, a 2-week low. Maybe we could put up a 1-year chart for natural gas. Any sign of, I mean, it has come off the trough of the spring, but any sign of a real rally for natural gas?
It's going to be tough. I will say this much: it's the first cold day of fall of 2023 here today. I mean, I'm a soft Jersey boy, so it was 29 degrees and I was freezing. So, but like I said, I'm a bit soft. But it was our first time below 30 degrees, and the associated pop we got in natural gas futures is up 4 or 5, almost 6% at one time today.
Yeah.
And so, without weather on the forecast, it doesn't look good, Andrew. The big forecasters are all calling for a pretty warm winter, above warm winter. If we have the same winter we had last year, it could get ugly. I mean, we are already at only percentage points of where we were at last year. And let's call it this. This is a good way of looking at it. March, it's the last contract in winter versus April. It's the first contract of the summer strip. It's trading at about 12 cents right now. It's trading about at 12 cents from summer being more expensive than winter. That's unheard of. However, that happened last year, and it's only 12 cents from happening again this year.
Bob.
At this time, that same spread, winter was 60 cents higher than summer.
Whoa.
And then it went into a tailspin, and by January, it was trading below. Summer, and that's worst case scenario.
We better jump.